Welcome back. Well, the SGX Nifty suggesting a flat start. Yesterday, we had a resilient performance. We came off the low point of the day and almost ended in the green. But today, there are a lot of stocks that we're going to be tracking in our top 10 segment. Sonia, you go first. Tell us about Hero MotoCorp. Numbers came late last evening.
Well, the numbers came late last evening, and you know what? Although the revenue growth was fine, it is the margin pressure that could perhaps keep a lid on the stock once again. The revenue growth was largely in line with estimates. It was about a 7.3% growth that we saw. But the EBITDA was down 2.6% at a time when a lot of, auto companies are seeing a recovery in margins because of the fall in raw material costs. Hero MotoCorp refuses to see that. The ad expenses have been higher as well for Hero. The ad spends have been higher. So that's been a drag on the operational performance too. The margins are down 110 basis points year on year, and the profits are lower than what the street was estimating and lower than what they did same time last year. The volumes, as I said, continue to be under pressure because of a slow recovery in the rural market. So total Q2 volumes were down about 0.7% at a little over 14.2 lakh units. Now, the management says that the global macro headwinds may keep the play field a bit uncertain, and navigating the same over the next few quarters will be important. However, as commodities cool off and rate cycle reaches its peak, the medium-term outlook for the Indian auto industry appears quite encouraging. So I guess cautiously optimistic there, but I'm going with red because the margins just refuse to recover for Hero MotoCorp. And we have seen, the recent sales numbers have not been impressive as well. So there is still some problems there.
Retails, especially in rural markets, have also, the wholesale numbers, have been a little better, but retails have been hurting as well. Now, Adani Enterprises is the other one which reported numbers. Vivek is here with more on this one. Vivek, hi, morning.
Well, good morning. It's a strong Q2 from Adani Enterprises. Remember, this time around, a lot more businesses what they've incubated, and the company calls itself as an incubator of businesses. So largely, when you're tracking the company, looking at how the various segments have performed. So it's been a good Q2, mainly on the back of very strong coal trading volumes and good margins coming in there as well. And also, when you're talking about these volumes, jumped up almost 70% on a year-on-year basis. When you're talking about the revenues more than doubling, again coming in close to the 38,175 crore mark. When you're talking about the margins too holding up closer to the 5% mark versus the 6.7% mark on a year-on-year basis, and profit again more than doubling at 461 crore. When you're talking about some of the key segmental highlights, number one, one of the main segments, the Adani Roads business, the Ganga Expressway achieved financial closure of over 10,200 crores, an important update there. And when you're talking about Adani Airports, remember the company managed to actually go ahead and do an operational update of close to 90% of the pre-COVID level. So again, some strong traction seen over there. However, on the other side, solar manufacturing as well as coal mining actually saw a subdued operational quarter this time around.
Okay, all right. Thanks a lot for that, Vivek. Let's hop across to Rima. Rima, how was Vodafone Idea's numbers?
Well, subdued. So the good part is they managed to see a revenue growth. So revenues have gone up by 2% on a quarter-on-quarter basis. So that's a positive. But margins have seen a big fall. Margins are down 300 basis points to 38.6%. The losses continue to mount. Loss this quarter is at 7,500 crore plus. The overall subscriber base has fallen by 6 million on a quarter-on-quarter basis. And compare this number with peers, because that's where the genesis of the problem is. Jio added more than 7 million subscribers in the quarter. Bharti Airtel added 500,000 subscribers, but at the same time, Vodafone Idea lost 6 million subscribers. Their average revenue per user went up by 2% quarter-on-quarter, 20% on a year-on-year basis. So that's a positive. But the problem is they continue to lose subscribers. Their debt is mounting. The net debt has risen well over 2 lakh crore rupees. That's putting pressure on their finance costs, as a result of which the company continues to post massive losses. The losses this quarter stand at more than 7,500 crores. Back to you.
Okay, thanks a lot for that. So that's on Vodafone Idea's losses continue over there. But I'm watching Amara Raja batteries, and I'm going with a bright shade of green because it was a very good set of numbers from Amara Raja. The revenue growth came in at almost 19%, a profit growth of almost 40% year on year. But the big positive really is the margins, 140 basis points higher on the margins at 13.2%. And the company says that the demand in the automotive sector from the aftermarket as well as the OEM segment was very robust. Exports showed a healthy growth in Middle East and the Southeast Asian markets. The industry battery volumes continued their upswing, especially in the telecom segment, driven by the 5G rollout in India. And they've now announced a lithium-ion battery manufacturing subsidiary for, a move into the electric vehicle space, a larger presence there. And that's something that the street will like with both hands. The other big positive is that the margins are now back above 13% after 5 consecutive quarters. So I'm going with a deep shade of green there.
All right, thanks very much for that, Sonia. Now, Ajanta Pharma is the other one which should be in focus. Ekta is standing by with more on this one. Ekta, hi, morning.
Thanks for that. Well, yes, definitely a multi-quarter low in terms of margins for Ajanta. So that came in at around 20.9%. The street was anticipating around 25%. Now the profit was down 20% simply because of the operational miss that it reported. The Q2 revenue was in line, so it was up 6%. The street was anticipating around a 7% growth. India sales did very well. It was up 27% year on year. Asia was strong, up 30% year on year. But what really got the street was US, which was down 5%, and the Africa institutional business, which was down over 50% on a year-on-year basis. The margins this quarter were impacted by factors such as raw material, freight costs, price erosion in the US, preponement of certain costs from Q3. But what could probably show some amount of cushion and respite today is the guidance. Second half is expected to be better. So they are guiding for margins of around 26%. They expect Asia to grow around 20%, and they are bullish on the India growth as well. So that could probably cushion any kind of downside that you could see for Ajanta today.
Okay, all right, Ekta, thanks a lot for that. Well, I'm looking at a couple of numbers on JK Lakshmi Cement. Actually, those numbers look good. The top line was a little lower than what Jefferies estimated. But the good news is that the realizations were much better. And input costs didn't go up as much. And that explains why on the EBITDA front, well, the number came in much better than what the street was working with. Profitability as well did look much better because the finance costs were a little lower. The other income as well was a little higher. In addition to the good set of numbers, the company has valuation support because now it's more than a 15 million ton unit and it trades around $70 per ton. So that's good news as well. Expect the stock to open up in the green while some of its peers either met or missed estimates. Well, this one beat estimates, so good news. Rain Industries, well, the numbers look pretty good on a low base. Revenues were higher. The adjusted EBITDA number was pretty okay and the margins were higher as well. So a green tick on both those two, Sonia.
Okay, green tick for Rain and JK Lakshmi. But let's move on and talk about Blue Star and SKF and how it shaped up. This time, Vaishta has more details for us. Vaishta, over to you.
Thank you for that, Sonia. Well, Blue Star has seen a marginal miss on the estimates. Though the revenues were up 27% on year-on-year basis, the margins have slipped to 5.4% versus 5.6%, which is just about a marginal slippage. But the poll was higher at 6%. The order book is also healthy at approximately 4,100 crores, which is up 30% on year-on-year basis. Now, within the electromechanical projects and commercial AC systems, the pace of execution remains healthy and there is a strong uptick in the inquiries. Also, in the unitary products division, the EBIT margins have improved to 6.1% versus 5.1%. Moving on to SKF India, good set of numbers coming in. Revenues were up 12%, margin have improved to 19.9% versus 16.5%, going with a green on the stock.
Okay, all right. Thanks a lot for that, Vaishta. Well, Vivek, we just got an update coming from IEX and it continues to look weak, right?
Well, that's right. It's a very subdued operational update as far as IEX is concerned. This is for the month of October. So when you're talking about the volumes at a little over 7,970 million units is down both on a month-on-month basis and on a year-on-year basis. The management says that the volumes are lower mainly because of the higher base and lower month-on-month volumes due to reduced renewable energy certificate trading. Also keep in mind, on the back of the price capping on the exchanges, a lot of sellers have also stayed away, is what Andis actually tell us. When you're talking about the easing constraints as far as the coal supply is concerned, that has also led to a downtick as far as prices are concerned. And what the management is saying is that going forward, due to improved availability in winter, you will actually see prices falling further and also volumes may be lower going ahead. So red there. Also remember, due to the onset of other power exchanges, there has been a slight dip in the market share. However, company enjoys a 95% market share as of now.
Okay, thanks a lot for that. So we'll keep tracking all of these stocks for you. But in the meantime, in case you missed out on any of them, here's a quick recap. Stocks with positive news flow. There's Adani Enterprises, Amara Raja Batteries, JK Lakshmi Cement, Rain Industries and SKF. While stocks with negative news flow, there's Hero MotoCorp, Vodafone Idea, Ajanta Pharma, Blue Star and IEX. In case it's too much for you, we'll take a short break so you can digest all of this news flow. And on the other side of the break, Keki Mistry, the Vice Chairman and CEO of HDFC, will be with us to discuss their Q2 earnings performance. Also in a bit, Deven Choksi of KR Choksi will be with us for some stock talk.